Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christchurch Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on major economic updates, October inflation numbers, FX and money markets, third quarter GDP data, and MPC expectations. The National Bureau of Statistics last week published Nigeria's October inflation numbers. The inflation rate, which is the increase in the average price level of goods and services, rose to 14.23% year-on-year. That is, comparing average prices in October 2020 to October 2019. This is the 14th consecutive monthly increase and the highest in 32 months. This increase can be linked to the continued impacts of COVID-19 disruptions, hike in electricity tariff, land border closure, rising fuel prices, scarce FX liquidity, as well as recent supply chain challenges due to the civil unrest in the month of October. The food inflation sub-index that tracks average food prices increased by 17.38% year-on-year, while core inflation, which captures other items excluding farm produce, closed higher at 11.1% year-on-year. Inflation is expected to cross 15% before the end of 2020. In the unofficial FX market or black market, the naira came under severe pressure as demand for FX increased significantly due to rationing by the CBN at the official FX segment. Additionally, the demand is as a result of investors hedging against inflation, as well as demand for festive season imports. The naira has depreciated by 4.6% month to date, from 462 naira to a dollar to 484 naira to a dollar as at Friday. This implies that you now require 484,000 naira to purchase $1,000 compared to 462,000 naira at the beginning of this month, translating to a loss in value of 22,000 naira on every $1,000 in less than a month. This trend is expected to persist due to the current CBN unorthodox FX policies. This has a direct transmission effect on prices of imported goods. We would continue to advocate investment diversification to dollar-denominated assets to hedge against the impact of inflation. The minimum investment across most SEC-regulated investment outfits is $1,000. The money market rates are approaching zero amidst elevating inflation rates. Hence, investors would need to increase their risk appetite to reduce this impact. You can start with allocating at least 10% to invest in either stocks with higher dividend yield, structured products by SEC-regulated entities, dollar products which include mutual funds, dollar fixed deposit and euro bonds, or small and medium scale businesses with consistent cash flow. Portfolio allocation to any of these options can increase as you understand the terrain. Nigeria's GDP data for the third quarter of 2020 was published on Saturday. The economy contracted by 3.6% compared to a 6.1% decline in second quarter of 2020, confirming that Nigeria is technically in economic recession. More details will be provided next week. The Monetary Policy Committee of the Central Bank of Nigeria will also meet today and tomorrow to review the developments in the global and domestic space. We expect the MPC to maintain status quo to allow for the transmission of the decisions taken at the last meeting in September to the economy. We also expect the National Bureau of Statistics to publish the following data for third quarter 2020 this week: pension asset and membership data, capital importation data, and foreign trade in goods statistics. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.